across then to the management of Corporation Bank. They delivered their numbers. Let's understand from the management. Ms. P.V. Bharathi, the MD, is joining us right here on ET now to talk about the way ahead and what happened last quarter. Ms. Bharathi, thank you so much for coming on board. The company has reported a profit of 60.5 crores. What were the growth and performance drivers that aided this kind of a performance in Q3?
As you're aware, the bank had totally focused on recovery during this quarter. We had organized a special program, Halla Bol, Jod Se Bol, and we have introduced many competitive schemes and campaigns for all the employees. So the entire team of Corporation Bank was involved on the field. They met the borrowers personally. They went and presented the OTS proposals to them, and they were able to bring many people onto the table, which has helped us to nearly recover more than 3,500 crores this year. So this movement of Halla Bol has been very well taken by the market, which helped us in improving the recovery, and in that, in fact, led us to showing some profits also.
No, could you tell us what has led to the decline in NPAs in the last quarter? Talk to us about how were the slippages, the recoveries compared to last quarter, and where are we seeing recoveries from, and what is the likely outlook going forward?
Yes, the bank is totally focused on the recovery movement, as we have indicated to you. The total recovery so far has been 4,000, and every quarter we have been closely following up the SMA statements. The SMA 0, 1 and 2 have been closely followed up, and we have been able to curtail the slippages to around 1,000 to 1,500 crores. So every quarter these have been closely monitored at all levels. We have 34 zonal officers and 6 circle officers, and which is monitored by head office. In addition to that, we have a weekly follow-up on the recovery that has been effected at the different zones, at the branches and the levels. And the NPAs also have been categorized according to their volume, that is up to 10 crore to 100 crores, and according to that the focused approach has been given to the field, which has helped us to ensure that we are making not only good recoveries but also avoiding slippages. So the slippages have been contained to around 1,500 crores per quarter, which has in fact helped us to bring down the NPA ratio. If you see, we have brought down the NPA ratio now to 17.36, and the net NPA has come down to 11.47%.
Okay, what about the capital infused by the government so far? How much of that have you seen, and what's the further infusion you expect from the government? Also, are there any stake sales of non-core assets that you could be looking at?
See, we don't have, non-core assets, we don't have anything much. We have only one small security subsidiary. Otherwise, there is not much of an investment in that. So from the non-core assets, we don't have any program or any expectations from that level. And going forward to the the question. The PCA, 1 second. Yeah, you talked about the PCA, right? So in the capital infusion by the government, the government had already introduced around 2,550 crores to us, and going forward we have approached the government for the infusion of the capital. The matter is under the discussion stage, and we will be knowing about it shortly.
Okay, could you also elaborate on some more steps that you could be taking in order to get, to come out of the PCA framework essentially? Are there any further measures being undertaken?
See, out of the 4 framework, actually we are comfortable with the 3 points. Our capital adequacy ratio is at 11.12%. Our CET ratio is much above the required limits, and the NIM and the ROA has also been positive. So the only factor that is affecting us is the net NPA ratio, which we have to bring it below 6%. And therefore, the bank is totally focused upon recovery to see that we bring down this net NPA ratio. In a gradual process, we are confident we'll be able to come out of PCA shortly.
Okay, as far as the provisions are concerned, it shows an improvement. So, have to provide for all in terms of the potential stress seen from JET and from NBFCs. What's your view on an overall provision picture for the coming few months?
See, we don't have an exposure on jet, and we have got the exposures we have in NBFC is just 4,400. And as per the IRAC norms, we have provided for the requisite amounts. We have not taken any divergence. We don't have any divergence, and we have not postponed any provisions also. All the due provisions as per the norms have been duly provided, and after that, our PCR has come up to 66%.
How do you view the margins that you reported in Q3, and for the margins trajectory, what is the outlook like?
See, the margin is comfortable. Our NIM is at around 2.90% in December 2018 as compared to 2.39% on 31st of December 2017. And yes, we are working out to have a NIM of around 3% in the coming years.
All right. Lastly, we'd like to get some closing comments from you. What is your overall strategy going to be like for the bank? What are your key focus areas for the next, say, 1 or 2 years? And also, how open are you to inorganic growth plans going forward? Since you've taken, over as the MD of the bank, what is the overall strategy going to play out like?
The bank, as you know, is a 113-year-old bank, so we've got a very strong foundation. Now, the only challenge in front of us was our net NPA, and therefore this year, with a very concentrated effort, we have been able to show a significant improvement. And our focus, basically being a retail bank, we are going to focus on retail. Our CASA percentage has really gone up to nearly 29.3% from the earlier 23%. And going forward in the recovery front, we are comfortable because our portfolio is totally spread out, right from zero to higher levels. We have got that. We are having a very good risk management system which takes care of all the prudential limits, the sectors under which we are going to take the exposure, the ratings under which we are going to take, and also the limits which we are going to take in respect of each account. So there will be a focus on taking up accounts with, good ratings of A minus and above, so that we will be in a position to have a very controlled approach on our RWA. And going on the retail, we have a very uniform exposure of around roughly 20 to 23,000 crores. If you take my agriculture, retail lending as well as my MSME, focus as usual will be on my retail lending. A housing loan has got a good pickup. We are also having special campaigns running for the retail lending. The recoveries has also been good. Agriculture, yes, we are a south-based bank, so we have got a good exposure to agriculture also. MSME is the order of the day, and we have been pretty uniformly working on all the three ratios. So we are focusing on a very uniform mixture of all the combinations that is available to ensure that our asset quality remains good. At the same time, we will be in a position to have a good interest income also.
All right, Ms. Bharathi, we'll let you go on that note, and all the very best for the measures and the steps that you're looking to undertake to grow the bank from here on. Corporation Bank looking fairly good, up 2%.